Hey, my name is Matiss. I'm the co-founder and CEO of Creamfinance, and this is what I do. My name is Matiss. I'm the co-founder and CEO of Creamfinance, and today I want to tell you why it's important to think like a cockroach when you're building a fintech company. But before I do that, let me just remind you that in the world of fintech, everybody seems to be more obsessed with like valuations and funding rounds and making, like growth at all cost and less worried about profitability. But in Creamfinance, we want to make money, and that's what we focus on. Yeah? So to be good at making money, you have to think like a cockroach, at least in our opinion. Meaning, how do you kind of spread around the world even if everybody tries to kill you? And how do you face adversity on a constant basis? So that's what my presentation is going to be about. So a little bit about Creamfinance. So our mission is to make money available. We do that by providing consumer loans online. Yeah? We lend anywhere from a few €100 for a few weeks, all the way to a few €1,000 for a few years, and everything in between. We're a purely online company. Everything we do is purely digital. In this slide, I hope you can see the table on the bottom. It tells you the three products that we provide. Short-term, 1-month loan with the highest interest, so it's a subprime product with an interest of about 150% APR, average size about 300, 400 euros. And then what we call term loans, a longer size, bigger maturity, and a lot lower interest loans is what we do also. And if there's one thing that we're super obsessed about in our company, it is what we call operational excellence. Yeah? The way we define operational excellence is three things. Number one is we want to make borrowing money online as simple as clicking one click. Yeah? You can think of it as like Amazon one-click checkout. That's what we want to do with consumer lending. That's one. Second is we live by what we call the smart data approach, which is basically where we want to make sure that every loan approval decision, every collection decision, every marketing decision that we take is fully backed by data at the minimum cost possible. And I'll refer to the smart data approach a bit later in my presentation. And the third thing is we build a global presence. We want to be able to underwrite loans to consumers online, starting with like happy places like Denmark, all the way to more crazy places like Mexico and everything in between. In this slide, you can see the kind of like high-level summary of the key highlights of our business. I'll talk you through very quickly. So we started in 2012. Now we operate in 8 countries around the world, so we have actual offices in each of those countries. We employ around 400 people with our head office in Poland, Warsaw. Last year we did around 50 million euros in revenue, and we're profitable on net profit basis, which is very important. By revenue, we mean the actual interest income, the commissions that we earn on the loans. We have raised around 100 million euros in various forms of financing over the years, debt, equity, etc. And importantly, what I wanted to mention is our Series B equity raise from one of the biggest South African banks called Capitec. This next slide gives you a bit more information. So Capitec committed to invest over 20 million euros in our company in equity last year, which is pretty much the biggest deal of its kind in Europe, where a retail public bank invests into an online fintech lender. So we're happy about that. And I'm pretty sure that, in terms of quality of corporate governance, there is no other company in our space of somewhat comparable size that has the same level of quality of corporate governance, right? Our board participants involve the CEO and the CFO of Capitec. They're very active on the board. It's not like, there's some kind of nominal people, but they actually come visit us and we go visit them very regularly. And, just for you to have a sense of what Capitec is, because it's not a brand recognized in Europe, in South Africa, it's the 3rd largest bank. Their market cap is around 6 billion euros, and they service close to 10 million clients. So there's definitely a lot we can learn from them. So 2014, we were, a fairly young startup. We had 3 countries in which we had started our operations. We had one product, which was payday loan, high interest, short 1-month loan. And we had built around, well, slightly less than 20 million in client portfolio. That was in 2014. 3 years later, we have expanded the number of countries in which we operate to 8 countries. And we've invested into new products. So now we have 3 different products. So this period of 3 years has been all about diversification and becoming more diversified in our product and market offer. And in the next 3 years, we're looking to really, with the experience and capital of Capitec, to become far more established in the countries and in the products that we are offering. So effectively, we want to become close to or top 3 in our space in Europe, even though we have operations outside of Europe also. All right. So the reason we've been able to grow, I would say, relatively fast and be profitable at the same time really largely comes down to primarily our obsession with credit risk management. And I refer to this, I was calling it smart data. It consists of 2 things, and I will then tell you about the chart. So first and foremost, automated scoring. Yeah? How do we check clients' creditworthiness online? Over the years, we've looked at millions of clients and tens of millions of data points, and we've learned that it's important to look for a specific type of data as opposed to quantities of data, right? Just big data and huge amounts of data is not important. It's important to look for specific things. And then we put all this data into models that we have developed in-house over the years with a team of over 30 people that are purely data scientists. And then we come up with kind of like, what are the probabilities, we call it probabilities of default, that clients will return us money or will not return us money. That's the first part. The second part is what we call smart collections. Yeah? So this is where, like I mentioned, we have offices in every single country, and we have call centers in every single country to call up our bad debts and debtors. And we do that through various automatic ways. So for example, we have in-house auto dialers that call up thousands and thousands of clients all at the same time without human manual involvement to save us money and time. We employ many different channels of communication to reach our debtors. So we have so far issued around 15 million euros in bonds. All the early issues that we did with retail investors, we have actually returned, and that's about 1.3 million. And then lately, or in the last 2 years, we have worked actively with a dear partner of ours, CVI fund from Poland, and they've bought 10 million euros worth of our bonds. And that's a private placement. So what we're looking to do now is, in order to continue growing and funding our loan book, but also to diversify our creditor base, we want to do another issue of about 10 million, which will pay about 11% quarterly interest, so 11% APR paid quarterly, a maturity of 3 years. So if you want to make money, come talk to me and we'll find a way. Thank you very much.